All right, this is Regions Financial Q3 2021 earnings call summary. And right away, they did increase their loans by 1%, which is not a huge number, but the loans are increasing. So that's really good to see. Of course, the PP loan forgiveness thing is going away, but there's still some loans still out there, and they do expect something like 80 to 85% of those loans to be forgiven. The other 15% will be accredited to their bottom line as far as profit goes on the interest on those loans. Regions Financial did say that the number of deposits and the amount of deposit, well, I shouldn't say the amounts, but the number of deposits have started to decrease, but balances remain high. And so what that means is that people aren't receiving new money as much anymore, but the savings rate is still high, meaning that there's a lot of cash out there still. And so that's the reason why we're seeing the CPI and the inflation steadily increasing really across the board. I have not gone through every sector as far as earnings calls go, but so far, every company that I've read through so far talks about inflation, and those high balance amounts in those checking accounts, in those savings accounts, is exactly what that is, right? Americans have way more money to spend, and so companies are going to increase prices to attract more of that money. The other thing that was important here is that Regions Financial say that credit card and debit card transactions have also increased beyond pre-pandemic. And so that's really good to hear, because that's going to drive fees for the bank. Those non, what do you call it? I can't think of the word, but anyway, the fees that the bank charges were up something like 8%, and so that's really good. Now, of course, being that they are a bank, a lot of their employees get paid basically commission in order to sell those loans and to generate those fees, and so that was also up 4%. So you make some money and you spend money to make money, right? So while that 8% is a decent number, we do have to keep in mind that for every penny that Regions Financial makes in those types of fees, they're paying a percentage of that out in the form of not only commission, but also higher wages as well, and maybe even some small administrative fees. The one thing that I did want to take a look at here, and they talked about this, is um, the areas that they are um, concentrated in, right? Which is the Southeast. We do know that Florida has been one of those states that opened early, has remained open, and amongst the South, um, specifically the Southeast, those places I think have again opened early and stayed open, and so that bodes well for a bank right in that area. The one thing that I continually see from Regions Financial, and I know this as well from my personal bank, is that they're closing a lot of branches. And so we see that here where they show that they consolidated 215 branches. And that gives me a little bit of pause, because whenever I see that, I think to myself, where's this labor shortage? And it makes sense, right? Because pre-pandemic, you had all of these face-to-face or customer-facing positions for a lot of companies. And after the pandemic, a lot of those positions went away. So even though they may be adding to their digital footprint, so they may be adding some employees to handle that traffic, I don't think it's anywhere near what you will expect from a branch, right? You know, when you talk about a bank branch, you talk about tellers, you talk about the bank manager, you talk about the loan officers there, and you know, you talk about, you know, maintenance. There's all these things that go into that, right? And so we're seeing more and more of these banking centers just being completely shut down, and no one's using them, you know, and so those jobs go away. And so every time I hear labor shortage, I'm just like, I don't know, right? I mean, we know that there's a lot of cash floating out there. I mean, come on, that's COVID money. And so, of course, you know, again, you know, the economy is doing well. I think that, you know, the crypto craze has something to do with that as well. I mean, literally, money is being created with crypto, literally created, because when there was no Bitcoin, all of a sudden there is Bitcoin, and you're telling me that someone can buy something that was just created, right, with US dollars, and then transfer it later into more US dollars. And so we know that, again, there's a lot of cash out there, that's really pushing prices and inflation higher. Um, but I just don't know if we're actually producing more, or if it's just, like I said, free money. So we'll see how this goes. Um, Regions Financial, and I do have something queued up here. They're looking at a way to hedge the rising interest rates that they think are coming. And that's kind of what you see here, where the dark green is their hedging income. Okay, so as of right now, Regions Financial is hedged for low interest rates. And so what that means is that if interest rates remain low, what they'll do is they'll buy a security that will make money as long as interest rates are low. When interest rates go higher, that same security is going to lose money. And so they just finished moving something like $5 billion out of that particular hedge position. And as you can see, they expect over the next 3 years to drastically reduce their hedging income, but they plan on increasing their forward rates, basically simply making more money with higher rates. Now, it's hard to turn a big ship, right? You know, when you talk about you know, $100 billion, you know, $200 billion, you can't just exit those positions at will, right? There's a lot of ins and outs and things that have to happen in order to change that, and they are talking about doing it, and they are taking steps to do it. Whether or not it will happen fast enough, we don't know. But again, they are trying to make it happen because everyone expects interest rates to increase. The other thing that's important to mention here, and I'll say that this may be a bit optimistic, but they did acquire a new company, Interbank, and so you see that here in the blue. Interbank deals primarily with mortgage loans, okay? And so what Regions Financial is expecting is that once they really get this thing going, they think that they'll be able to grow those mortgage loans faster than what Interbank was able to do. Now, Regions Financial also says that part of the reason why they have so much money coming into them is because they're constantly adding new customers, right? Part of this is going to be from the PPP loans, because in order to receive a PPP loan, you have to have a checking account with that particular bank, with that issuer. The question becomes, will these same customers who receive that PPP loan continue to be customers? Will they continue depositing money? Will they continue using those debit cards and credit cards? Will they then, once a relationship has been established, continue to open loans and things of that nature and continue being a positive on to the bottom line of Regions Financial? So far, it looks that way, but again, it's hard to tell because there's so much free money floating out there. I mean, it's very possible that there's people, opening these accounts and depositing this money simply because they have it. Once that cash is gone, do those customers stay? And I don't think we're going to really see the answer to that question for at least another year or two. Okay, it's going to take a while for this cash to dry up. And once it does, we'll really get a chance to see if the PPP stuff was a boon to the banks or if it was, a nothing, right? Again, like I said, Regions is expecting 85% of those loans to be forgiven. What happens if that number gets to 95%, 97%? I don't know what the number can be, but the point is that it may not be 85, right? The other thing that I want to touch on, and by the way, I'll say that the earnings call was very short, very sweet. There was a lot of questions concerning what Regions Financial is going to do with all this cash. They did say unequivocally that they are not going to be purchasing any other banks. They are not looking to do any kind of mergers or acquisitions with any banks. They are solely looking at non-bank companies. And so what that means is they're looking for companies like Interbank that are doing those mortgage loans, right? They completely got out of their auto loan businesses. And so they're really looking to do the commercial loans, the mortgage loans, things of that nature. And they definitely have the cash to do it. They did talk about share repurchases. With the price as high as it is, I mean, I don't like share repurchases. I really don't. I'd much rather see the dividend increase. They definitely have the cash to do it. If they do share repurchases, which reduces the amount of dividends they have to pay because there's less shares to pay a dividend on, then why not also raise the dividend, right? But we'll see what happens with that. They haven't said anything about raising the dividend, but they are again looking to not only purchase more non-bank assets, but also do share repurchases. That's it. The price right now is $24. I said before that I wanted to reevaluate once it hit 26. Whether or not that happens, I don't know. We'll wait to see. That's still like 10% more left to go. So be on the lookout for that. Other than that, banks doing good. Again, all of the free cash floating out there, all of the PPP loans, really is supposed to be a boon to banks. And so far, so good. I haven't seen any of the reports from the other banks, but Regions Financial definitely doing what they're supposed to do at the moment, and the price has skyrocketed.